Hey traders, checking in on the stock market today. Bounce followed through today in a big way, with the bulls having complete control pretty much the entire day. Some sectors having big days out there, like the cannabis sector. We've got a complete shift in sentiment. Fear last week, back to FOMO and euphoria, V-shaped recovery this week very quickly. Let's see if we're going to set a lower high and tighten up, or are we going to rip right back up to highs?
Introducing the Chart Guys Swing Report, a weekly digital publication that uses technical analysis to identify long-term market opportunities. Understand the market from a swing trade perspective. Follow institutional money as it rotates from sector to sector, and make the most of the Swing Report's weekly trade opportunities, with key entry and exit levels provided. Performance is tracked and updated weekly. For more information, visit us at chartguys.com. Now, let's check out some charts.
So starting off with SPY, again, V-shaped recovery straight from the low of Friday, and here we are talking about all-time highs again. There's a gap to fill at 383.54 to be keeping an eye on, and then the all-time high is 385.85. Looking at it on the S&P 500 futures chart, we were watching for the potential of a rejection from the high of Thursday to set up an inverse head and shoulders, but this morning bulls said, we don't have time to consolidate, and they just kept running. So I wouldn't be surprised to see some consolidation on this 12-hour time frame before an all-time high. We'll look for a back test of these EMAs, plenty of space for a higher low to form. This is actually the 6-hour chart. This is what it looks like on the 12-hour. So looking for at least a 4-hour pullback to establish a higher low after this very significant run. And other than that, it goes to show you where a couple of things. Number one, the complete shift in psychological sentiment. And keep in mind that those who know how to play this game and those that play this game with big money, they rely on those 180 shifts in sentiment to make the majority of their money. Whether it's complete fear into a V-shaped bounce or complete euphoria into a rug pull and big drop, that is how the emotions are poked from the herd and retail traders to lead to people selling at the bottom and people buying at the top. So get very familiar with those shifts in sentiment. And it's very easy to just, put your head down and disregard them, take them for granted. Like, okay, now we're bullish again. But really focus in and reflect on the feelings. What were you feeling last week? What are you now feeling this week? Because the more you get comfortable with and recognize those emotions, the more you're going to look at them when they happen in the moment and say, oh, I see you, fear. I'm looking at this support level and I have nothing to fear as long as I'm playing off of this level. And this instance, it was all weekly EMA 12. If the bulls keep weekly EMA 12 control, they keep complete control. And for a lot of individual names and sectors, that is still holding at this point. So for a longer term outlook, that is my guide. It's almost like the bumper rail on a bowling alley. If we're holding it, the bulls have absolutely nothing to worry about. So an ideal start to the week, obviously, as we closed right on top of it last week. There was fear at the end of last week, and we are right back in euphoria mode. So IWM, anything under 217.91 is a daily lower high. I would anticipate a daily lower high as the most likely scenario there. We're not seeing increasing bull volume, which in my opinion would be needed to go straight to that higher high. So if we lose the hourly uptrend without breaking 217.91 resistance, then the daily lower high will be set. As of right now, I would still call anything above 210.89 an hourly higher low. So the bears would have to come out tomorrow for a lower high to look to be set. And from that point on, the low of the end of last week, 204.84, is a key level because bears have to break that level if they're going to confirm any downtrends. Obviously, that's not in the picture at the moment. We would need a very notable sentiment shift into the rest of the week if that were going to be on the table. QQQ, 330.32 all-time high in play. Hourly uptrend consolidated into the close. We've got the Apple and Google's earnings reaction here. Plenty of space to maintain the hourly uptrend. When we lose it, we then look for a daily higher low with plenty of space for it to form. So a very significant V-shaped recovery and showing us that was pretty much the majority of the weakness to end last week. Not the majority, but big weakness from the tech sector, and then a ton of strength leading the way on this bounce. So Google earnings reaction, bullish reaction, but profit taking, still an all-time high. So it's a bullish reaction. Amazon's been all over the map and pretty much a non-event. at the moment. We'll have to see if we fade up to the high of the reaction or fade down to the low of the reaction. But a tightening 5-minute range right now. And, you got the earnings reaction, and then you got the reaction to the fact that Bezos is stepping down, but 5-minute equilibrium currently shaping up. Either way, not a notable bearish reaction to either, which is keeping the QQQ bulls and the SPY bulls holding up here after hours. XLV Healthcare. So a little bit weaker, didn't break the high of Thursday. So any name that did not break the high of Thursday obviously stands out as a bit weaker than names that have. So 117.47 resistance, then we're looking at 119, and we would have to reject from resistance and break this double bottom low from Friday and Wednesday if we were going to confirm a daily downtrend. So most important support is 114.05, and most important short-term resistance, there's only two of them, high of Thursday and then the all-time high. Financial sector had a big day today, a big gap up open, inside bar bull break. So again, look at the weekly. Even though we pulled back for 2 weeks, we still bounced at the moment right off that weekly EMA 12. So we're now looking at the next daily resistance at 30.28. The bulls are creating enough space to be looking for the potential of a daily trend change. We will need a daily trend change back in favor of the bulls if we're going to have confidence that that weekly high or low has been set. But the major sector that has been giving us the most weakness in the last 2 weeks definitely was strong today. Biotech bulls all-time high. Really nice bounce. First 5-minute oversold conditions, back burner trade. If you don't know what a back burner trade is, Google back burner chart, guys. First 5-minute oversold. Bounced, set the lower high as the most likely scenario, double bottomed, and then bulls took over from there to a new all-time high. When I'm playing the back burner trades and you're in an hourly uptrend and you're looking for the first 5-minute oversold conditions to give you an hourly high or low, generally I will scale out half into profit and then put my stop under that low and then try and let the hourly uptrend continue. So that's what happened in this instance. If you're in at, let's say 159 even, if you entered a little bit too early, and then you exit half at 160, and then your stop can be at 157.99 for a fraction of pretty much break even, but tiny risk on a stop being triggered. That's the ideal scenario for me, to just have absolutely no risk and to be just patiently waiting, because that was our hourly high or low and the hourly uptrend continued from there. Lead bull sector, all-time highs. Semiconductors, weekly inside bar at the moment, a significant bounce. Anything under 246.79 is a daily lower high, and that is the most likely scenario on this initial bounce. Then we'll look for the daily high or low, because the amount of space the bulls have created off of that low where we came from. Very wide range here, but again, a significant bounce. And when we are looking to determine, is an equilibrium most significant? Fib retracements. You get to that 50% retracement and beyond, you start looking for an equilibrium. What could make the less likely scenario take place and drop to a lower low has to be increasing bear volume. What could see the less likely scenario of a new high has to be increasing bull volume. If you do not bounce to the 50% retracement, it remains a possible bear flag. Solar sector. So high or low compared to 106.88. Pretty much a double bottom. And now looking back up at 125.98. Anything under that level is a lower high. Technically, this is a head and shoulders setup, but we would have to see the daily lower high set. We would have to drop down and break 106.88 to go from a daily uptrend, higher low, higher high, higher low, lower high, lower low. That is all a head and shoulders is to me. A move from an uptrend to a downtrend, or a move from a downtrend to an uptrend. MSOS, so MJ sector looking really good. Only regret for me is not adding more, but certainly in an initial position, and I would add 2 more maximum. So we're looking right back up at the all-time high. We've got 46.49, 47.55. Canadian MJ space was on absolute fire today. APHA was up 20% at one point. There's a lot of hype in this space as long as the broader market is strong. And the last 2 days with the broader market alleviating fear has seen big moves in the MJ space. So very comfortable with the position I have, and I will add on any daily consolidation. And my new line in the sand level is 40.33 for the bulls to maintain their control. And guess what we held? Didn't even test it, but weekly EMA 12. And I could, whenever I see that, I know that there is a tighter EMA in play than the 12, and I can look for it. Let's say I'm really focused on this name. Pull it up to the 8. Still want it a little bit tighter. Pull it up to the 7, and that's what I would be using. Or you could just draw a trend line. But I like when it moves. I like when it's reactive to the price and it moves with it. Dollar, bounce follow through. Just a little bit, nothing major. For me, I'm considering anything above 90.04 a daily high or low, and that is what I care about most at this point. How long can the bulls maintain the daily uptrend? Because when it's lost, we zoom out and scout a weekly high or low and see if the bulls can change the weekly trend. But asset bulls are loving the disregard the last 2 days of this dollar strength. Always keeping an eye on that correlation because it's always shifting. Gold, weak. Double top at 1875, not a good look to then drop down and break daily support of 1831. We didn't get much follow through on that break, but it's a very notable rejection from resistance ever since we had a breakout on the daily. No red flags. Your red flag is right there on the 8th, January 8th. And from that point, the bulls haven't proven much. We had a nice solid bounce in there, but overall, the bulls aren't proving it. So keeping cautious, because if we drop down and break 1802 from here, we confirm a weekly downtrend. We actually are still in a weekly downtrend. We never confirmed a weekly uptrend. So this monthly consolidation is still healthy, but that's why my stop is under this low, 1764, because if that breaks, we confirm a monthly downtrend, and I no longer want a bullish position. Silver, big time drop. We're seeing a scenario now with anything that's attributed to Reddit, because GME is collapsing, is being taken down with it. And there's some names that were fine on their own, like Fubo and PLTR, and maybe SPCE was in there as well. There were names that were just fine on their charts, bullish. The Reddit crowd jumps in, they pump up a little bit, and now they're all dumping in unison as they are correlated to GME. And silver, in my opinion, is definitely a part of that. So it's important to stay bigger picture if that's, I started in this trade already, and I'm bigger picture mindset based on the monthly time frame. So I look at this daily chart and I say, wow, that's a big pump and dump. But we're where we were on Thursday. No, that's Friday. We are where we were on Friday after a bull break. So yeah, it would be nice to keep those gains, but it doesn't change my longer term plan right now because we're in a monthly, weekly, and daily uptrend, and anything above 2470 is a daily high or low. So I did sell just under 27 on SLV yesterday. I reloaded 2620, and I reloaded more this morning, 25, low 25. And then that was me reestablishing my swing play. Obviously, if I waited a little bit longer, I could have gotten lower, but I wasn't even anticipating trading my swing position until I saw the pump. You better believe I'm selling into that pump. But reloaded about 5% cheaper, so certainly not complaining. And now just keeping that back as my swing position. If we lose the daily uptrend, I will reassess what my game plan is, but that's now the swing position in the swing account. And then I day traded SLV today, and we had a nice, I made one attempt where I stopped out to be looking for a 5-minute higher low to form. It was probably right here. Saw that bounce, made an entry on a 5-minute higher low. No, that wasn't it. That's too close to the bottom. Not sure where it was, but I made one attempt and I stopped out with a very acceptable loss. But then we were watching the 5-minute falling wedge, and I was going aggressive on this trade just because I'm getting more comfortable with SLV. I was watching it all day. I know the 4-hour time frame is a waterfall drop. So I'm watching for an hourly oversold bounce, knowing it's been a 4-hour waterfall, and I'm looking for signals on the shorter term that that bounce is taking place. So I recognize this flag, or I should say this falling wedge, and I traded it very aggressively. And what I was doing was entering on lower lows. Probably hadn't recognized it at this point. Recognized it right here, I would say. So scaling in, scaling out into the 5-minute lower high, and I had multiple things aligning that tell me take profit. I don't care if I leave anything on the table. Take profit into the 5-minute lower high. And it's the falling wedge resistance right with the 5-minute EMA 12, right with the clear price level where we know a 5-minute lower high is most likely. So I would buy and sell, and then I would add more on a lower low, sell on the tiny bounce. At this point, I was watching it on the 2-minute time frame. So I did sell a little bit more after buying and then selling. And then I ended up with, when I'm trading, day trading, I will go a lot larger position sizes because my risk is always defined. If I'm swing trading, my risk can't be defined because we can always gap up or below my levels. So in this situation, at one point, I had 750% larger a day trade position in SLV than what my swing trade is. And I lightened up a little bit here on this double top, and I was ready to go real aggressive. And I turned down the dial from extremely aggressive to just aggressive. Exited a bit there, pretty much break even to protect, and then the bulls took over. And then I just spent the next hour scaling out. Scale out, scale out, scale out. We haven't changed the 15-minute trend, just looking for a 15-minute lower high. And now we have a 15-minute equilibrium into the end of the day. So with that trade, that drops even further what the break even would be on my swing trade. And because it was with such a larger position size, I probably took $2 off of my swing trade break even. Miners. So miners, notable to me that we're seeing the red close 6 days, 7 days in a row. So that's telling me that the metals are seeing more strength overnight and the bears are in more control once the bell rings. But to change the daily trend, we have to hold 33.63 and break 36.28. Anything less than that and the bulls don't prove anything to us. Have to change the daily trend. And the metal bulls have to put a stop to this bleed over the past couple of days. And it is my opinion that the dollar is having a bit of an impact on this move. If you're going to have a little metal pump, obviously you want it to happen when the dollar is weak because that's having all the wind at your back. You can still go up if you have a metal pump and the dollar's going up, but there's a wind at your face. You're not getting the same momentum and follow through. Oil. Nice follow through. Weekly bull flag confirmed. If 51.44 does not break, then it's a weekly bull flag. It didn't. Big 2-day move. Bulls in complete control. Lack of resistance. The next level after 55, which we just broke, 57.41. Next resistance. Natural gas had great follow through to start the day, but gave it back. We confirmed daily trend change yesterday. We confirmed the weekly trend change today. And now we're looking at the bulls trying to change the monthly trend with a break of 310. 4-hour consolidation. Pretty notable pullback and notable bear volume. And it will be notable to me if we confirm a 4-hour downtrend from here. If we do, we'll zoom out. We'll scout a daily higher low compared to 255. But the battle is on now for 310 resistance because if we change the monthly trend I talked about in the video yesterday, that is fairly notable for a long-term massive euphoria pump into a long-term despair drop and then a monthly trend change back to the bulls. And again, Canadian MJ, APHA, euphoria, despair, monthly trend change took place at 6:15 and here we are 150% almost higher. Hope you all had a good day today. I don't have anything else to say. Do good things, and we'll see you tomorrow.